construction. We lend in first mortgages only. When you think about Pillar, you're going to think about rates automatically on a first mortgage between 8 and 10.5%. That's the average rate range for the deals that we do. Every mortgage with Pillar has a 2% lender fee, which is deducted from the advance, and 1% of it is paid to you in broker commission. And we do that deduct from the advance because we don't want to overfinance the clients above 80%. So we don't want to do 80% plus the fee plus costs, not the type of business that we're into. Now the client will pay legals for their own lawyer, and then there's lender legals, which are $495.50. That's the lender legals side. We do require appraisals on every deal, and we have an approved appraiser list, and you can access it on the website or you can email me for it. We're not against adding additional appraisers if there's someone not in your area, but if there are appraisers in the area, we would prefer that you use the ones that are on our list. And all applications can be sent through Filogix. So are you on, is your base Filogix, David?
Yes, it is. Yes.
Okay. So we're listed under institutions, not under privates, and you can submit direct through the system and your commitment will come back that way as well. So that's sort of the base idea. Now, just to give you some qualifying guidelines as far as Pillar is concerned, we have no minimum beacon. We have no minimum population restrictions. And we do not need the property to be within a certain distance of a major center. We do allow up to 80% loan to value on well and septic properties. So there's no reduction in loan to value for that. And we do properties that are off the grid. And when I say off the grid, it means that there's no power going to the property, no municipal services or anything like that. So if you had, for example, a client who had a piece of land and they had a little shack on it to go hunting on in the middle of that season, we could lend on something like that. Okay. So any questions so far just on the general information?
Yeah, I have a deal where these people, they bought a piece of land up near Peterborough for $500,000, and they're going to build on a house on it. The cost to build is going to be around $1 million.
Mm-hmm.
So my question is what it would be your initial advance, if you would be interested in the deal, what would be your initial advance on the land, and then as a percentage, and also a percentage of your loan to value?
Okay. So when we look at land, when we look at construction in general, there's a few different types. We have straight land deals. Client's going to purchase the land and hold it. And when we say hold, it means they're going to hold it for more than 6 months before they get started. Then you have your purchase and build right away, or you have your construction renovation. So we'll go through first land. So when a client purchases land, there's different types of transactions that can be done. If they have just the idea that, hey, I'm going to buy a piece of land in the Kawarthas, and like you said, David, build on it later, we can lend up to 70% on land, bare land. Now that would be assuming that their service is close.
Sorry, my dogs are well nuts.
So cute.
And Joanne, is this mentioned into this Pillar blueprint, land specific only?
The specific land loan to values and process are not in the blueprint. The blueprint relates to strictly going right into construction.
Oh,
so
okay.
if you're going right into construction, that blueprint really helps walk you through how do we advance, what are the costs to advance, and those sorts of things. If you have a client that just wants to purchase land, give me a call and let me know where the land is. Now, our minimum loan amount is $100,000. So if you get properties up Sudbury Way or Timmins up that way, land can be a lot cheaper, but you have to keep in mind that minimum mortgage amount. So we will lend up there, but we won't loan amounts typically under $100,000. Okay.
Beautiful. Okay, I'll circle back with you as
Sure.
Please continue. Yeah.
And so our max mortgage amount, as far as Pillar is concerned, is $2 million for any given transaction. And so types of land can include agricultural land, It can include urban land, which we consider serviceable land.
Mhm.
And then it could include your sort of rural vacant land. So on something that's serviceable, that would be like in a subdivision, someone wants to purchase land and just hang on to it, you're likely looking at 70% as a max. Then 65 is more rural when you get kind of on the outskirts of town, not really agricultural, but it's you know, it's like where I live in Tempsford, Ontario. It's these smaller pocket communities. And then you have agricultural where it's actually zoned agriculture. Maybe it's a small farm and it's got 100 acres, or maybe it's just that a farmer wants to buy a piece of property behind him attached to some land he owns already. We'll look at those deals up to 60%. I mean, the sweet spot really for land in the industry and for us too is that 50 to 65% window. Now I don't mind where it is, and the type really doesn't matter. If a client wanted to buy a piece of land on an island, I could do that. And I would do that likely up to 65%. Same with waterfront and things like that. When you get into cottages and people buying these second homes and sort of the idea of having a vacation property, we love those. That's right within our niche as far as that's concerned. So now when we set up for land, when you're talking to clients, you need to know a couple of things. You need to ask the client, do they own the land already? Yes or no? And if not, then we'll look at helping them purchase it. If they own the land already, do they have financing on that property? Because that's key, because we have to stay in first position. So if we were to advance at 65% on land value, we have to ensure we can pay out that existing mortgage, cover the costs and fees, including the 2%, and still give the client what they need later to sort of get their build going. And then what I would say is, how quickly do you want to build? So typical build clients will start digging within 30 days of their land advance. If they're not going to start the build within 30 to 90 days, I would probably put them on a PAC payment so they're paying some interest, so that they're not getting kind of caught up in the interest game. Because what the worst part is let's say today, which we see a lot of this today, clients will buy a piece of land today, close on it. They want to build in March. We're going to collect the interest from now until March. And then when they want their first advance, what am I going to do? I'm going to deduct 5 or 6 months worth of interest from their initial advance, plus fees, plus costs. It doesn't leave them with a whole lot. So a client like that, I probably would put on a pre-authorized payment versus having just the interest deducted from the first advance, which is normal for our product. So when we talk about construction, we lend up to 80% on the final market value of the property. So not the cost to build. The misconception in the industry is that we're all doing it based on the cost. That is not the case, right? You don't want to have the client run out of money. Okay, so we lend up to 80% on the final market value as appraised. So the way we determine that is the client, or you would get from the client, their cost to build and their architectural drawings. And that would sort of get us started, because that tells the appraiser, we know what the land's going to be worth because they'll have comps for that. But now they know what you're going to build on there and can apply sort of the natural comps based on that. Now, some clients will still need to do amendments and things like that down the line, but that gives us sort of our base to work with. So the example that I typically use is, let's use the end value of $1 million. The house is going to be worth $1 million when it's all done. We'll lend up to 80%. So that's $800,000. We're going to charge the client a 2% fee, which is $16,000. 1%.
I'm sorry, can I stop you for a second? Earlier you were saying that there's a loan on the land, which goes to a max of 70. And now are you just doing this for simplification? I mean, how could you ever have 800,000 owing on $1 million property?
Right. So what I want to show you is, if the client's doing a land construction deal, how do we approve it and how do we advance on the land?
Okay.
So I'm going to give you sort of just a mock scenario, because construction can be difficult because every deal, the end market value is going to be different and the land value will be different. What you have to determine is, do I want just a straight land deal today? Or do I want the land built and incorporated into a construction file so that you can transfer smoothly into that process? You don't want to put them in a land deal and then 3 months later they say, oh, I'm ready to build now. Because then there's costs attached to transitioning them into a construction deal. They have to requalify and all those things, right? Does that make
So,
sense, David?
okay, but does that mean that if you're saying somebody's ready to go, that you can actually do 80% on the end value, because that end value includes the land?
That's right.
So you can go to 80%, including the land, as long as it's a project that's quite significant. And I can also
Right. Yeah.
Go ahead.
So what I think where the miss is, and this is where I'm going to show you in this scenario, is the initial advance on the land is still going to be that 65%. The total approval is 80% of the end market value, including the land.
Okay, so I see. So at the end, you can get more money based on the total value. Okay, fair enough. All right. Anyway, I can just reiterate your point that because there's a few newbies on the team, so just that what you were saying about lending based on the end value is very significant, because most lenders just do it based on cost.
Right.
So people will get effectively, if you need more money for your build, using pillars is a great way to do that. So anyway, but my example, is there a sliding scale? Because in my example, no. So you'll go to 80% on a $2 million home. You'll go up to 1.6.
We will.
Okay. All right. Well, that's great.
Because we assume when the house is done, it's probably going to be worth even more than what we anticipate at the time we do the initial market appraisal, right? Because it
Okay.
takes them time to build it. So we're building it based on assumptions at that time. So we do see some inflation on takeout. The biggest thing is where Pillar is different in the industry is its flexibility for draws, because there's unlimited draws. The client can take draws anytime they like, as long as there's a percentage of completion. The way we verify that is the appraiser would go out as they would on a Purchase Plus and do an inspection, and they'd say, listen, you've got this done and you've got that done, and that equates to a certain percentage of the overall build. That's how we determine our draws. There's a handy little calculator that's available online and under resources on the website, where you can download the construction calculator to help determine what you think the draws will be for your customer, your client. So when we set up an initial build, we will do it, again, an appraisal based on as is and as is complete. So the initial advance, like David was saying, is on land typically, because they don't have anything built yet, up to 65%.
Okay, so can I just check in with the team to see if anyone has any questions before we move on, because we've been speaking at we're using a lot of the lingo and whatnot. So for some of the newer people, I just want to check in to see if anybody on the team has any questions before we proceed. Shiva, Angela, Mike, Ravi.
David.
Yeah.
So every time there's the appraiser comes in to check to distribute the tranches, is there additional cost on those, like checks?
So the client would pay for that inspection when they're ready for a draw. So let's say they advanced on the land, they got their build going. They say to you, I'm ready for some more money now. You would get the original appraiser to go out. He would do his checklist. The client would pay that invoice for that checkup. That would then be sent to us, and then we would determine the draw. Every draw has a fee. There's an administration cost of $200 per draw. So after your land advance, most of the advances are very similar. And when I say similar, the cost that you see come off a draw will include the following: a $200 administration cost. You will have the interest deducted for the amount of money borrowed previously. Now, keep in mind, that's another difference with Pillar, is clients do not pay interest on money they haven't used yet. That's the worst thing in the world, is to get on a pre-authorized payment for 800,000 when you've only advanced 100 grand on the land. I'd rather pay the interest on the land I've had advanced, not on the 800,000. So that's a big key piece, because clients don't want to spend a whole lot monthly when they're in the midst of spending money on their build. They invest everything they have in this build, right? Their thoughts are all about getting it to the next So getting back to the advance, so you'd have a $200 administration cost, the interest deducted from each advance. There's a 10% government holdback on every construction draw, and that's required by the government of Canada. And that is released 60 days post-closing. So once the property is deemed complete and can be occupied, the time starts. 60 days later, they get that 10% back. Does everybody clear on that part of the process? And what
Anyone else have a question? Okay, thanks, Shiva. Good question.
Really good question.
Yeah.
So really, once you get through your initial advance and the client gets started, the future advances are all really the same. Not the same dollar amount, but the process and costs are all the same. There's no sort of hidden things. The mortgage is completely open. If a client finished in 30 days, not that that happens, but if a client finished quickly and wanted to pay out and go now to their future lender, that's okay. It's not going to cost them any additional cost to break the construction contract. You know what I mean? It's fully open. Let's look at the alternative scenario. Let's say it takes the client a year and a half to get this build done. They get to the end of the 1 year open term. Will we renew it to help them get to the finish line? Absolutely, we would. We're not going to leave a client hanging. The whole purpose is to get them to the finish line. So knowing your exit strategy is very important to a MIC and to a construction lender. And when I say exit strategy, I mean, what are we going to do with the deal when the client's done building the house? Oftentimes, brokers will do the deal with us. They get paid their commission. They walk their client through the process to the end of the build. Then they look at placing them in their future 5-year mortgage, 3-year mortgage, whatever you deem to be the best solution for your client at the time, where they're going to stay longer. Companies like Pillar and other companies like us who are also mixed are not looking for the long-term customer. We don't want to renew them into a 5-year at 10%. That's not the right end game for this type of client. Most of the clients that come to Pillar for construction financing are A clients. They just need the flexibility within the build to get them where they need to go. We don't often see a whole lot of poor credit for construction builds because they have to have quite a bit of contingency set aside in order to get them through their soft costs or sort of through their initial stages. Now, normally a client should have between 10 or 15% of the overall total build cost in their pocket to help put towards costs at the beginning of the build or during the build for deposits. It could be to bring utilities to the property. It could be for their permits and drawings. So it's good to ask those questions, you know, when you talk to the client is, you know, do you have money set aside outside of the initial down payment on the land to get the ball rolling? You know, because it can be quite costly. Now, a lot of the lenders that do our takeout for us can be anyone. It could be an A lender. It could be a monoline lender, or it could be a B or a private lender that they end up transitioning to, depending on the need. For example, we get a lot of clients who are flippers, who will purchase properties, they will build on them, they want to sell them quickly. That's a great deal for us because either way, Pillar is the way that we make money is on the fee, right? Not necessarily on the rate. So it's important for us to just know the exit strategy. Where you got a flipper, like that's a great client for us. They know exactly what they're doing with the property when they're done. They're selling it, hopefully. And if they don't, we'll keep the property for them for a year, maybe renew them for another if they need to wait till the market allows, right?
So Joanne, so when you mention a flipper, what did you say was your minimum loan amount? And are you working with people who, let's say, you know, they buy a house for $300,000-$400,000, they put a little bit of money into it. Like, are you working with builders, contractors, flippers who do that?
We do have some. So there is some realtor partners that deal with repeat clients that like to do this all the time. Not necessarily getting into too much development mortgages. It's more, I'm an individual person. I like the idea of purchasing real estate, fixing it up and flipping it. We like those clients as long as they can confirm their affordability and their ability to carry the mortgage if they had to stay with us. That's a good client for us. Now, there's two different types of renovation mortgages, right? You have your standard, I'm going to gut the kitchen, I'm going to gut the inside, and I'm going to cosmetically update the property to sell. That's one type of client. Then you have your other type of client who says, well, I'm going to blast the roof off this house or blast the back end of the house out and build an addition or another story on top. The way you separate out what kind of a deal it is whether or not you're changing the footprint of the property. If you're changing the footprint of the property or its square footage, or you're required to get major permits for the work, that would fall under the construction umbrella, whereas you would have draws through the process. The alternative to that is more like a conventional purchase plus, where you're doing maybe getting 3 quotes for, say, a kitchen, a roof, and finishing the basement. Now that would just be your standard refi plus improvements. And that deal is also available, but we would do that more under a termed mortgage. Not, I guess you could do it on an open if you wanted to.
Okay, can I ask a question? I think that you have a very good niche market in this construction, and I'm just wondering if I'm sitting here, if I'm one of the people, because it's like on the call, do you have any suggestions on how we could find like those types of borrowers? Like, where do we go to find people who you need that kind of money, build our business?
Now, these kind of clients, oftentimes realtors are a big one, right? Because they'll know someone who's constantly looking for available land in urban areas to do these builds, or they're clients who, even if you're driving down your street and you notice a house go up very quickly, and maybe you see someone who's just built but down the street from you, and they're now selling it as soon as it's done. That I'd be knocking on the door or contacting the realtor, or trying to find out maybe somebody on site who the person is doing the build, because they probably do more than one of them, right? The thing you got to remember is there's not a whole lot of brokers who are experts at this type of the business, right? These are often deals on a one-off someone is doing. So you could really capitalize this if you wanted to be the expert. There
Yeah.
are no experts. I often find when I do presentations, I get half the agents will say, yes, I'll entertain a construction deal. I've got some previous experience from where I've worked before, or maybe I've done a couple deals and I'm comfortable.
Yeah.
And then I get the other half that say, I actually turn that business away. And that's a hard thing, because I'd like everyone to get to the point where they felt comfortable enough not to say no out of fear they don't know how to do the deal. So
Yeah.
for some of the new agents on the call, if someone phones you with the idea that they want to do a self-build, a contractor build, or renovation mortgage, let's pool our resources together, and we can always plan a call. David, you've been in the business a long time, so we have a lot of tenure within this group as it is, and everybody's got a little dabble of different experience. There's nothing wrong with sitting on a conference call and going through a scenario and seeing if we can make it work, versus just saying, I don't want to touch that deal because it seems a little scary, the idea of it.
That's a great idea. And Joanne, I had a good experience. I don't know if you were around for that. I did a construction deal. It was in Welland, and it was for a borrower who could not get enough money from his bank. So he was referred to me. I thought of you guys, and it just worked. The numbers were there, and he did not flinch, like that it's private money, so it's more expensive than the bank, because he saw the value in how you guys operated, and so it came together quickly. And it's really nice that you guys also pay a finder's fee, because that's not very typical, like most in the private world. So you have to, you charge your own fee, and then you're under the microscope. So this, deal, I charged a little bit of a fee, plus I was getting a point from you guys. The guy thought I was a hero. Meanwhile, I had to stop at the bank to drop off the big deposit check when the whole deal was done. So it was a good thing.
Well, but this is like, I don't want to be so naive to think that we're all working for free here. We're
Yeah.
not. The reality is you want to provide your client a very good product. We're not here to gouge the customer. Now, when we compare Pillar to an institutional construction mortgage, which you'll see out there, and let's say you see that at 599 or 699, or maybe the credit unions got it rolling at a 7% teaser rate or something. The reality is the cost of borrowing for all of us is quite similar, because of the costs and fees associated with the advances, the rate. It could be the cost for administration. I often get asked, do you charge a lender fee and an admin setup fee? The answer to that is no, we don't, but I know that others do. So you have to keep in mind all those costs equate to a rate at the end of the day. So when we say 999 on an open, that can seem a little daunting at the beginning, but what do you get for your 999? You get 80% approval on the end value in rural locations, which is tough to get. And then you get flexibility within the build for your advances. You get interest rate deducted from each advance without mortgage payments every 15th of the month, which clients like. And you get the opportunity to have sort of an institutional feel because we're going to take, later on pre-authorized payments, you're speaking to someone. It's not like I'm just an individual lending you my money. So they appreciate that. Now, I think brokers like it because I can compare it against Meridian. Meridian has a construction product. They're a credit union. I've worked for a credit union. You lose the client when you go to a credit union because they would like that share of wallet. And at the end, they want the customer to be a Meridian client. I'm using them as an example because they have good products for out in the marketplace. But as a broker, if I'm looking at my future income, I like the idea of placing a mortgage with a company that's not looking for the retention because I'm not competing with you because we're not a client direct company. We rely on you. So you're the first point of contact for everything. You will replace the mortgage later when it's done, which will earn you, I'm assuming, more income.
So you guys are in healthy shape now. You're putting out money because there was one point, I don't know, 6-9 months ago when I called, or it was the end of last year. I think somebody told me you had no more money. You ran out of money.
Mm-hmm. So great for us, not so great for the broker community. Now, the reason that happens is MICs are based on investment, right? So investors come in, they set parameters out. They allow us to lend their money for a specific rate of return, and they want us to stay within this like safety box. Now, what happens is that sometimes those investors want to move on and do other things. So you have redemptions and things like that. So when you deal with MICs, you'll always have most success in the first 3 quarters of the year. The tail end, we're starting to fill up all those buckets, right? We might not do as many land deals, or maybe we won't do mixed use, or maybe we'll just halt lending so we can just level that out. You don't want to take yourself out. Now, we've been in the business 30 years. So I feel like we got a good handle on it. It can sound crazy to the idea of running out of funds, but we're not an unlimited MIC. We don't have, we're not lending in the GTA. So our investors are very niche too. They come to us because they enjoy this part of the business or they've had some experience there and something about it they like. So yes, there could be times where I say to you, you know what? We've done 48 land deals in the last 16 days. Maybe we're going to hold and not do some land deals until January. And I'd be honest with you about that. I mean, if you called me, I could tell you exactly where we're at. For right now, we've got an abundance of funds, so there's no issue with capital.
Are you fine with Wasaga, Collingwood, Elmvale area?
Love that area.
Okay.
The thing you want to watch is leased land and crown land. We don't lend on either of those, and we don't lend on any floodplains. So now Lake Erie is becoming sort of a scary stretch for flooding and things like that. We are not scared of recreational communities. Now, this is a big one with other lenders because they don't like being in these recreational zones with potential Airbnb incomes and things like that. I don't mind being in any of the ports or along Port Huron and areas like that. Again, we love the cottages. We'll lend on cottages up to 75% value. So and we'll do construction projects on cottages. So if they want to buy a small cottage that requires work, we can look at that. If they're going to do improvements to it down the line, we could help them finance that. And takeout is not a big issue. I know there's always concern is like, I do an agricultural deal with Pillar. Where do I take it when it's done? The lenders often don't have an issue with the end. It's getting to the end. They don't want to invest the money and the risk of going through the process of renovating and things like that. The agricultural stuff, we find a lot of times we get Scotia taking us out, B2B. We've got private lenders that take us out. Some monolines like credit unions will go out to those areas if it's within a certain distance to their home base or their branches. So there's opportunity there for sure. And land all day.
Very good.
Question, Joanne.
Go.
I got a couple of questions.
Sure.
Ravi, go ahead. I already asked one.
Oh, okay. So Joanne, I was just trying to get a sense of the rate range. You have two kind of product. One is a purely, land you're talking about. One is a construction, land. So what is the range,
Sure.
rate range you can, yeah.
So construction mortgages started at rate 9.99% on an open term.
Okay.
If you did a straight refinance or purchase outside of construction, the rate range is 8 to 10.5% on most deals. Last week, the highest rate I saw go out was 9.65%. Now, mind you, can it go to 10.5? You absolutely. We have issues with credit, or you're asking for the max loan to value for no beacon and limited income, then for sure
Right.
the rate's going to go up. So when you think about Pillar, you're going to think about 8 to 10.5% on an average 1 or 2 year termed mortgage for a refi or purchase. And
Mhm.
then on the flip side, you're going to think about construction at 9.99% open. So
Okay,
that would be the difference between the two.
beautiful.
And it's
Now,
a 2% fee on top of the 9.99 for construction, correct?
yes, that's right. So
With a
2%,
1% finder's fee coming.
that's correct. And that's on every Pillar file, regardless of what it is. And we charge a minimum fee of 2,500, regardless of little loan amounts that are, 100,000 and whatnot. No
Mhm.
matter what, the base fee that you would get would be that 1,250.
Okay, Joanne, just a good segue on the broker fee. If the mortgage is fully open, is the broker fee like 100% or is that scaled?
Oh, no, the fact whether the term's open or closed makes no difference as far as what you get paid. Is that what
Okay.
you mean? Like it,
Yeah, exactly. Yeah.
Also, the size of the first advance makes no difference. You're paid, correct? Aren't you? We're paid on the limit on the day of registration. Is that not correct?
that's right. So if you have an $800,000 mortgage and your first advance is 100 grand on the land, you're going to get your 8,000 on the initial advance as your broker fee, your 1%. The reason we do that is, now keep in mind, every client's not perfect. We hope that every client can get themselves to the end of their build, but sometimes clients bail. And they bail and they say, I'm out. I ran out of money. I'm not finishing my build. Well, now you've invested all this time. And can you imagine if I was only giving you 1% of each advance?
Right.
Like that would be very good, because then you could end up not getting paid for the work that you've put in. And we don't want that. And that's why we've set up the broker fees that way and the finder's fees that way, because we felt like it was necessary to keep you motivated to get them through the project so you get your next paycheck on the takeout. But also, our time is worth something, and we can't always rely on clients to do the right thing. Much as we believe that they're all, they have good intentions, it's the reality is some of them don't make it through, right? And we got to make sure that you're looked after. The other thing is this is a neat thing that I run into a lot on regular 1 or 2 year terms. If you're coming up for renewal and your client's getting close to renewal, we don't contact the client first. We contact the originating broker first, and we will let you know what the renewal is going to look like and have you vet the deal sort of and present it to that customer. Now, some brokers choose to opt out of that because we have brokers that do not want the repeat client. It could just be that maybe they're in a hub or they don't deal with that retention side of the business. What's your setup for that, David, with the agents? Does everybody recycle their clients, or are you kind of a one-stop shop? I'm not sure how everybody's
Well,
set up.
it'll depend on everybody's individual style, like how they want to run their business, right? Like people find their own clients and then they take care of their clients as they see fit.
So if you chose to not want to be the first point of contact for a customer, it would default to David. Just heads up for everybody. So that could be, or if you decide not to stay with the firm, David, those deals would default back to you, whether you know of the client or not, just to give you the opportunity to reach out because you're the originator.
Well, it makes
So
sense to stay in touch with your clients. If you want to build a business, that's the best way to do it, is repeat clients and keeping in touch with past clients. That's my opinion.
And it's a good way to maintain relationships with your lender. right? It's important that we think about that, because the more you partner with your lenders, the more they will do for you down the line. They rely on you. Like, for example, if I got a client and I couldn't place them and a broker that I've dealt with can't place them, maybe you're that call, because we have a relationship to say, hey, listen, can you work on this for me?
Yeah.
You know, make the stuff rely on that. So
It's a very good presentation, Joanne. I just want to check in. Angela, we haven't heard from you. Mike, anybody have any questions? You guys still awake? Where do we stand out there?
I still have the second question. David, I got a second question.
Sure.
Okay, so Mike, don't disappear on us. He unmuted himself. Hang in there, Mike. We'll get right back to you. Shiva, go ahead, buddy.
No.
Okay.
Okay, Joanne, just getting back to the fix and flip. What if the client doesn't have like lots of capital up front? Do you do like a cross collateralization
We can
on
cross,
principal?
we can do blanket mortgages, those sorts of things. It would
Awesome.
just depend. That's more of an individual ask, really, like, because that wouldn't be the norm, but do we do it? For sure.
Okay.
You know, there's been instances too, just on a regular mortgage, where a broker says, listen, I got a ton of equity. Can we do an interest reserve for a client for 6 months and have them pay 50% of the mortgage payment and have 50% capped into the mortgage? Sure. Like, I mean, I'm not against being asked anything. It's just, it's how you present it that
Yeah.
will determine whether it would be considered. You have to really know your client and know the deal and what's the value of doing the blanket, or what's the value of cross collateralizing, and how does that alleviate risk for us down the road? It's up to you to really tell that story. You know, when you deal with companies that are mixed, that are lending privately, the story means so much. Your understanding of credit, understanding of affordability. You know, the underwriters love the word affordability. They love it because we base everything on the client's affordability outside of construction. Now,
Okay.
from a ratio perspective, I would probably qualify most deals at 9%, just to give your eyes the ratios. We extend to 40-year amortizations, and we would prefer that the TDS, GDS be under 55% for the fixed term mortgages. Those
Okay,
fixed
so Joanne, you know your stuff for sure. So we're going to have to do more business. Mike, you got a question, buddy?
Yeah, well, actually, it was sort of similar to what Shiva had, but because we did one last year, and but I was just curious on sort of that stages where, you know, during that time frame, because we ran into a blip with a permit that went a little awry, and then it delayed sort of certain items. So when you do that, when you just explain to me, like, you know, based on a certain, like a permit closing, because sometimes it's, you know, electrical based, or it's this based, or it's that based, that kind of thing. I just wanted to get that a little bit more clarified.
So Mike,
the reason why, because
you're
I might have a client, why, so that's
like,
why.
if you're delayed, you mean, so they decide they're going to get into this, they're maybe just delayed because of permits or delayed because of work. Is that what you mean? How will we do that?
Yeah, like the tiering part of it, because I mean, you know, we would get funds advanced, and then we'd finish up that area. Then the inspector would come and he'd be happy. Okay, the foundation, boom, he's done. You know, the framing, etc., all that in tiers. So that's where sometimes, you know, there would be, and I really wasn't that, you know, every single day per se, but
Right.
you know, to find out what the issue was. Whereas it's worse when you've got everybody, and my point is, it's the worst thing to have when you got everybody ready to go and there's a delay in getting funding.
Well, and
So,
it happens fast, because again, this is
oh yeah,
a real client controlled product. We're not
yeah,
driving those milestones. So if they're hitting a wall and they're ready to go, I mean, it's really as fast as they can get that inspection done. We could fund funds within 24 hours, as long as
okay,
there's a
so
percentage of completion and they're still moving forward. If they're
yeah,
not, then I would go back to that point of, if you're not doing a draw within 30 to 45 days, let's make a
yeah,
payment together, because you
yeah, okay,
want to keep it moving. So I think really the overall message here is, can we do construction mortgages and land? Yes.
yes,
Can we, and do we provide a flexible solution for the client? Absolutely.
yes,
There's so many different scenarios within this umbrella product. where your clients will fit in. I really want to encourage you, and I know we're on a timeline, David, it's just to have them reach out, have everyone reach out. Let's just keep the conversations going as far as individual scenarios.
Definitely, definitely. We haven't heard from Angela yet. Angela, are you still awake? Does everyone know what construction financing is? You know, I'll tell you, the basic thing, it took me, and this is maybe why you see people, a lot of agents will shy away from it. Because like you just kind of have to get your head around some, this basic idea that there's this current value of a property, either it's just a piece of land or maybe a house that's like needs to be renovated. And then you have a completed value, right? And the appraiser determines both based on your plan. Like he can just from a sketch of paper say the completed value is going to be $1 million or $2 million when you finish doing.
Mhm.
And so the developer, builder, whatever, does some work, adds value to the property. Appraiser says it's a little further done, and then some money's released based onto a formula, a loan to value. And that continues, and more work, more money. And just that simple concept, like not every, Angela's brand new in the business. And if she's still awake, then I hope that was at least somewhat helpful. What she's saying from Angela.
Yeah, yeah.
I'm here.
I'm here. She's here.
there. Where is she? She's in cyberspace. Hold on. Let's see. Is there chat? I'm here. Sorry, door is getting replaced.
My unit door is getting replaced, so I'm with the dogs at the front door because there's no door right now in my unit.
Okay. Well, we're glad you're awake at least, because I know it's very technical, and it's Angela, you're new, and I like that was my point, was that it probably took me 3 years before I like understood that basic concept of construction finance. We take certain things for granted.
We did.
Yeah, but anyway, it's very good, Joanne. Yeah, go ahead.
Mention one other thing. If you get into a deal and you get an approval and you're a little bit nervous about presenting the approval because you haven't had the experience, we do offer an opportunity for the underwriter to come on, or myself to come on and have a 3-way call with your client to walk them through the process. Or if you just want to do it yourself, to sort of kind of pick on the things that you should present and how you should explain certain points of the process, the underwriters will do that with you if you ask. So
well, that's a very good service. And I also just want to mention that to anybody on my team too, if you ever wanted me on a call to help you. So that's a very good point, Joanne. Thank you.
We always call you by default, David.
I know, but it's different. It's different to call me and, to consult with, than to bring on a sales call. It's a different thing. So, whatever people's needs are. Some people may feel that's something they need. Some people they don't.
And let's say you got to a point where you want to approach a small builder that's doing 5 units and you want to be the exclusive finance person for that group of homes, which happens quite a bit. So let's say I go to Mr. Builder and I say, I can get construction financing. Why don't we partner together? I'll be your exclusive broker for these properties. Clients who buy from you will have them deal direct through me. I'll get the customers, we'll get the information, we'll get the approvals with Pillar. They have such confidence in that. And a lot of the builders know who we are because we do a lot of construction. And it gives them confidence too. We want to get you to a place where you feel empowered to sort of talk about the product openly and be confident and find these partnerships, because once you do one with a builder, they'll come back to you again because it gives them sort of a good feeling when they know you've taken them from start to finish through their build.
Okay,
right?
Joanne, we've got to let you go now because I have to reserve a few minutes for a group chat. So Ravi, if you've got a deal, please call Joanne, connect. You should have her contact information on the email. If not, I'll share it, but I think she just sent us an email before. Thank you very much, Joanne.
And we'll talk soon. Thanks so much.
We'll talk
Thank
soon.
you. Thank you so much.
Thank you.
We'll be in touch. Okay. Thank you.
Thank you.
Thank you.
Thank you.
Okay. Okay. All right. So yeah, I just wanted to leave a few minutes. So just to all kind of synchronize here. Angela, I don't know if that was like extremely boring or whatever, but being new. So I wanted to make this, I think this type of meeting should be relevant to everyone. That's a real niche market, the construction, right?
Absolutely.
It's a
I'm
real,
loving it.
right. So it's a niche market. It's far off the beaten path. You know, like we all know people who are buying houses and this and that. So it by default, you know, we think we're just going to do residential, and some people can build a massive residential business, no question about it. Okay, but I will tell you that the compensation you can get, even if you do a construction deal like once a year, it doubled what I make on average on a deal. It was double, and it's nice when you get like a $10,000 commission. Ravi, you're in real estate, so your
Sure.
commission checks would normally be, and your commission checks in the mortgage business are going to be larger too, because you're probably doing more commercial deals, which is also a way to have bigger ticket sales. But it's a good niche. So I hope that you all got something out of it. I did record her presentation, so I'm creating a playlist of stuff if people wanted to watch it. Any of our meetings are going to be available there. It's only for like insiders, because some of the things that are said and discussed are not for people outside. It should just be
General
for our team. Okay.
general public, yeah, no,
Yeah,
Yeah.
makes
Okay.
sense. Yeah, this is.
Okay.
internal.
Okay, very good. So any other comments, questions, issues related to construction financing or anything else that you guys want to discuss?
Yeah, for
No, all
me,
good.
definitely she offered a point of interest. Of course, now I am working on a couple of things in the pipeline. And in certain cases, based on the rates she mentioned, they can be a good fit for her. Yeah.
Okay, very good.
Yeah.
Anyone else?
Well, I like the fact she's rural, because remember, I've got, that other deal I'm working on
Yes.
that's up north. So that comes in very much so handy on that one. Like my personal experience has been GTA stuff, like our deal last year with Jerry, and then even my own place. But yeah, knowing that she's got a lot of, I'm surprised by her area, how vast it is, which is a good thing in a good way. But yeah, it's nice to know.
Yes, absolutely. Would you guys be interested? Hey, Ravi, I told you I was going to get you some contact information. What's the
Oh,
name of the
yes.
company again?
I think you
They do
mentioned
investments, right? The land developer.
correct. So basically, I'm looking for equity today. Actually, it's a very good deal.
Okay,
They're
hang on,
looking.
Ravi, hang on. I'm sorry. I have to stop you. You can't start pitching your thing right now. We're in the middle of a conversation. Okay.
Sure.
I was about to say you can talk about it after, but just let me finish what I was saying. I want to ask you if you and the team would like me to bring them on. Okay. They are and not in order to raise money for them, Ravi. Okay.
Mhm.
So let's keep this, and that's because you wanted a contact there. So, okay, I don't come on. You and I need to have a talk about this. Okay, I'm sorry, but we have limited time here. So you wanted a contact there. I'm working on it.
Sure. Thank you. Yeah, I think it
Okay.
was Graybrook, right?
Yes, Graybrook. Thank you.
Yeah.
So I wanted to ask the team if they wanted me to bring in Graybrook. They're a land developer and they return like 20% on per year. If people would like to see that, you guys let me know if you want more of that. Otherwise, Ravi, I promise I would get you a contact. I'm working on that. Okay.
Appreciate
Can
it.
you elaborate a little bit more, David?
What? Sorry.
Yeah,
Yeah.
I don't know.
Okay.
What is that? 20% for me, 20% for the client?
20% for the client. It's they pay the best referral fee that's payable is Pulis. Okay. Pulis Investments, you can make probably between 2 and 3% commission on that. But I think that I want to curtail this conversation right now because I just think we need to stay on point. So I'm going to ask the team if they have any questions about more mortgages. And if not, then I'm going to suggest that we discuss outside of this forum these idea of bringing in investment presentations and how we do that, because it's under a different umbrella. Okay, Ravi works with clients, and I'm happy to give Ravi a forum in here to the extent that it can benefit everybody. But we need to have a plan, I think, on how we do that, so that that if people want to be part of it, they can. And I don't know if it should be part of this meeting or a separate meeting. We can discuss that. Any other mortgage related questions or issues? Angela, we haven't heard from you since last Monday. Just to let you know, if you're still there, if you need me on a call with your with the people, you can bring me in on a phone call, or you can reach me anytime. That was a good potential client. We just want to keep it moving along. We don't want to feel that you're, like asking them for 10 million documents. I know that's part of the process, is managing customers who
Yeah,
get
thank you.
annoyed, right? Go
Thank
ahead.
you for that. Yes, I did follow up with him today because I haven't heard from him. So I did a follow up today, and he said that he has asked his employer for the letter. Yes, it's done. Okay, thanks, Rob. Sorry, guys. And that he's getting the other documents, so he will be hopefully giving it to me today or tomorrow, so that we can put that in, and then yeah.
Okay. So yeah, there was the tax returns. We were going to ask him for 2 years tax returns. So I figure, like, I think this might be a good conversation to continue, because then, everybody saw the case. So then this is like kind of like qualifying and moving a customer along the sales cycle, right?
Yeah, so I asked him, for the letter for his employer, and then I asked him for the TD, the most recent TD statement from his parents for the line of credit, and whether it was for business or personal.
Okay, so let's have a chat, you and I, when you have time, Angela, maybe later in the week, and we can just keep the guys in the loop, but they don't need to be involved in like all the nitty gritty.
Yeah.
But I think that was, I felt that was a very good call. And I just wanted to thank all of you for your attendance on all of these calls every Monday and whenever we do them. I really appreciate it. And I want to make them time efficient, and keep you all interested and engaged. So I appreciate your participation.
Hey, David. So this is just to the team. If you want, David, like that last deal I just closed, if you want to use like any of my deals to just sort of like train everybody, I'm okay with that too.
Shiva, sorry, can you repeat what you just said, please?
No, the deal that I just completed.
Yeah.
Like,
Okay. So
right?
you're saying we could use it as a case study. Is that what you're saying?
Yeah. Like, I mean, if everybody has a different deal they're doing and you can see the deal, you can see
Yes.
it's a different case study. If they're okay with bringing it on so everybody can learn from it, right?
I think it's a great idea, Shiva. Nothing like a real case study, and people,
And this one is like, it was completed, so you actually know what we did to get it done.
Okay, so how
Right.
about next week on Monday? We talk about that, okay, as part of our meeting, and then also Ravi and I will synchronize, and because I would think I'd like to give Ravi some airtime, so him and I will synchronize to figure out exactly what he's going to present. But I think that that would be worthwhile. Those are two topics for next Monday. And if anyone has anything else that they want to talk about or whatever, then please contact me. Okay.
Sounds good.
Yeah.
Okay.
Beautiful.
All right, good. Okay, thanks again, everybody. And we will talk soon.
Bye,
Thank you,
guys.
David.
Bye,
Thank you,
everybody.
everybody.
Bye-bye.
Okay,
Bye-bye.
guys, have a good week.
Have a good